non-fees interest. Interest always be there. The outlook is good. Present circumstances, there's probably more requirement for loans to ride through, to support the cash flow, the slow cash flow. This is actually the time to lend. If you look at it, because this is the time business are actually in need of cash support. Provided they're good business, we'll support you to ride this period.
Maybe what looks like good business today may not be so further down the road.
Yeah. Again, it's your ability to evaluate risk. We are in the risk business. We have to actually take risks. And we deal with the customers that we know, who has been with us for a long, long time. And they have ride the 98, you know. And 98 is not, and 2008 is not worse than 98. 2008 is not worse than 98, as far as we're concerned. With 98, we've seen terrible thing happens to our businesses. But 2008, even now you still see, you know, people are still not too bad. They're still going through their daily life, and the business, yes, affected, but not like facing the interest rate of 18-20%, right? They actually, the ringgit moved violently against them, right? You know, those days the business are affected by the interest rate, by the ringgit exchange rate, by the confidence in the economy. Today we don't have this problem. We don't have this problem at all. You know? Yes, we are bracing for slowdown, but have we lost confidence in our economy? We have not. Have we got a very high interest rate that they can't afford, that will destroy their business? None. Has the exchange rate moved against them violently? Yes, they move, but not violent. So, if businesses cannot take this type of impact, then, you know, they should really look at their process, their model, because their business will, every 10-year cycle will face such situation. So in the bank's case, it's the same. We've prepared the bank business to actually take such impact, and we will be able to actually guide our customer through and support them through. So far, we don't have any situation where we are in, what do you call, concern, panic. Our customers also feeling the same. No, we don't.
And what do you think of the rest of the world coming in, you know, coordinated interest rate cuts, pumping money into the system?
Don't you think that this is good? But it's an act of desperation. We're just finding, you're finding what it takes to sort it out. Cutting the interest rate, pumping in liquidity, guaranteeing deposits, right? Trying to recap banks. But until now, you don't have a plan.
Looking into mark-to-market.
Mark-to-market, and said these are. Would you imagine that when we asked that mark-to-market not be implemented, how we would have faced? What I'm saying is that do you know at this point the whole plan about to solve the problem? I don't. I'm trying to find out what's the whole plan to solve at the US side.
I only read reports that some banks are still bidding to implement the bailout plan.
If you look at our 1998, other than what I said about the CDRC, Dana Modal, and Dana Harta, to handle our outflow of our foreign exchange, we had selective capital control, right? We did that. We disengage with our stock exchange from Singapore side, right? We do that. A lot of things we did. We actually got the whole plan together. So if you ask that, we approach it, and the timing was such that all are done with perfect timing. And then to avoid black market, do you remember when we had selective capital control to avoid black market for US dollars? Actually, central bank was supplying US dollars everywhere. So you find that when we have selective control, there's no black market for US dollars. Do you notice that? Because central bank was supplying. So they actually, for us, we thought through the whole thing in implementing our solution. Whereas today, if I ask you, they have not come with a document for the US. Not that I know, maybe they have it, but not that I know that they've announced it. How they're going to handle the whole thing.
What about new clients, new potential clients? Clients whom you have not tracked for a number of years or for a long time. Do you see that they are in a precarious situation?
I really won't know. Those, we can only talk about the clients that we have. Those that not with us, I think those clients will have to talk to their bankers and make sure that their banker understand them very well, right? And this is the time to prove that we are bankers, not sunny day bankers, you know. Yeah? Cloudy day bankers also, we are cloudy days, rainy days, as long as you can ride it through. The word is, you're viable, you can ride it through, Affin Bank will be there with you. And we tell them this, we want you to stay in business. Staying in business is so important for us that we don't want anyone of our client to ever think that they are under pressure by banks and the banks triggered them to just get out of their business. That will be a sad day for any of Affin clients. Okay?
What is the progress of your partnership with the Bank of East Asia?
We're coming quite well. We are discussing with them about establishing some form of partnership to do Islamic banking in China. That's the first thing we are looking at doing with them. That's all. Yeah.
I believe the talks have been on for some time.
Yeah, but it's not easy to you know, China is a place we got to get through, must understand the market, and Bank of East Asia is helping us through. And it's not, and it's like banking is not something that's a ready market. It is a new altogether there, legislation issues and all that. So that's what you can rest assured we are working towards that quickly, but we don't want to rush into things. Rushing into things, you know, you may not get the best out of it.
We read reports that Bank of East Asia itself has some write-down problems.
Yeah, we only read the reports from the from the news. That's all. They have write-downs. Other than that, we're not aware of anything else. But they're a strong bank. They're a strong bank. They're able to take any of this impact. Yeah. And again, I think Bank of East Asia doesn't bet everything onto one business. Yes, they're just like normal banks. They bought some papers hit by write-down, but they're still strong. They're still viable. You know, they should not be looked upon as you know, any different from others.
Do you see the contagion effects of the meltdown hitting Malaysian shores? And what if there's a prolonged downturn?
I think there's already an effect. You can see contagion effect is on the Malaysian shore, but the impact is only different. It's not, the degree is not as big as you know, as deep as some other parts of the world. Basically, the impact has been cushioned by the fact that we have prepared ourselves better this time. If you look at the economy itself, it's quite well diversified. You know, well diversified. The financial sector, the banks are very strongly capitalized, and evidenced by, you know, the NPL percentage, the lowest we ever recorded. Thirdly, I think if you look at it, the volatility factors that affect the economy that happened in '98 is not here. So in that sense, I think we are more prepared We are entering this situation with strength, not on weakness. We are entering the situation on strength. So I think we'll be able to ride it through. But our pickup, whether we really pick up, when we pick up, will be dependent upon the US market. Because they are our trading partner, largest trading partner. Overall, I think,
do you see a prolonged downturn?
I see at least 3 years. Not a downturn, a slowdown. I think a slowdown will take 3 years. 3 years will be dragged for over 3 years, for up to 3 years.
And you think we can last through those 3 years? Is this your most conservative or your least conservative?
No, it's a best case. It's a base case. Best case, probably 2 years. But you look at it, can we ride? Yeah, because you look at our reserves, very strong reserves. In 98, do you know what's our reserve? If you track, 20 over billion US dollars. Today, way past 100 over billion. So.
But the markets have grown much bigger these days.
Yes. But the market globally, the excesses has gone bigger, but Malaysian is not. The way we do it, we've actually got 98 to thank for. 98 has actually ensure that we build on the stronger. 98 prepared us very well for this 2008, really, because I was involved in 98. I see that 98 has, and we're glad that we actually got that 98 as a first installment rather than carry it through to 2008, because imagine we don't have, we would have gone worse for another 10 years to recover. It's tough. 98 is a check. We have a check, whereas the other parts of the world don't have that check. They just got hit once. We had a check in 98 so that we can face 2008 better.
There is an expectation of an uptick in NPLs. Do you see that happening, and how would restructuring of loans impact profitability?
I think NPL will trend upwards, but not like into a situation where it's out of control or endanger the banks though. Trend slowly, because basically there is a slowdown of the economy. Cash flow for companies will be tighter, right? And if the company don't get restructured on time, then NPL will go up. Then we look at the employment market, ensure that people are fully employed. And if unemployment rate goes up, then you find default coming into the individual market, for the individual, the housing loan market, the credit card market, the hire purchase market. So we're tracking employment market. Ensure that that will be an indicator whether NPL coming from this consumer market will go up or not. Currently, we think it will trend upward, but not to a level where we alarming. No. Realistically, it will have to trend upward in line with the slowdown.
You see restructuring of some of these loans affecting banks' profitability in a big way?
No, restructuring won't affect the bank's profitability. Restructuring means that we are restructuring to the ability of the borrower. They will still continue to pay the same rate what they're paying.
But it takes a longer time than what you expected originally.
Yeah, but it's okay, basically, because when we lend money, right, we expect them to pay on some assumption. If the assumption has changed, we have to change our repayment term. So that does not mean that the customer is not viable. That does not mean that they would pay less interest. No, they still continue to pay the same amount, except that because of the variables has changed, we will just change our tenor loan terms. That's what bankers are for. You can't stick we have to actually respond to the client situation, not stick to what we think is our policy. I only give you 5-year loan, and your cash flow says you got to pay in 8 years. If you do that, you will find that the customer will be a non-performing loan, a matter of time, because you are actually pushing him to actually contract his cash flow 8 years to 5 years. So for Affin, we are very clear. We would work towards the cash flow of the client, but we will track very closely. So to say that restructuring means NPL, no. Restructuring means responding to the client cash flow situation. We can trigger an NPL if we don't respond.
In the current scenario, what would be the greatest challenges to leadership of company?
To stay afloat and to ride this situation. It is a test to leadership, whether you can actually adjust to situation and have you prepared your company to face this. Good times, quite easy. Riding through the difficult time, the test is whether you can stay afloat and ride through situations. Wrong leadership, your company will just go down, and there goes many of those employees that depend on you.
So it must be quite gratifying for you, sir, to see that Affin Bank is still surviving while banks of over 100 years old like Leng is gone.
Yeah, it is. Very simple. I tell you, I told my staff, you see, Affin had its problems, but we survived because we know our business very well. We did not take what we call high risk to sacrifice the bank. More importantly, is this: we did not chase profit. What I used to say, chase profit. We make profit, but we don't chase profit. Chase profit is very simple. If you push and push and push, you have to take higher risks. As so long as the risk, the high risk you take, provide you the reward, they forgot about the risk. They only remember the reward. What has happened to, like, Lehman? The reward came in. The risk came after that. So that's what they have to go off. They got close. So my advice is always this: there are so much profit you can push to the market, can extract from the market. Beyond certain things, you have to take high risk, and high risk means it can be a risk to your existence. Affin never take such risk where it will compromise its existence. Yeah. And we have very strong risk management. No one individual could put Affin in any situation where it can actually cause its existence at risk. No one. And the board monitors very closely. Every month, the board tracks Affin performance in detail.
Will the market ever learn?
Market will learn. Market will learn this time. You know why I say market will learn? The losses are not incurred by pure shareholders. The market now found out that the losses are incurred by men in the street who bought all sorts of structured products, all sorts of things from them. So they never forget. At least for a while, they will not forget. So now selling a name is not so easy. And the board that actually monitor all this will now be more careful, take more interest into all these fancy things, whether it's CDOs, CMOs, credit CDS, credit derivatives. They will now have to pay more attention and understand all this terminology and the working of it. Those days, this would easily pass the board as technical jargon. Today is not easy. The board is now having to actually really deliberate on what is credit default swap, what is collateralized mortgage obligations, all these fancy names they put in.
latest reports have it that they are attaching all